Now that the world is starting to open back up again, what are retailers going to do with all of the inventory that's currently sitting in their stores, their warehouses, and the products that are about to come in? Let's talk about it in today's episode of the Bringing Business to Retail podcast. Welcome to the Bringing Business to Retail podcast, where I, Selena Knight, share strategies, interview retail revolutionaries, and delve into the minds of e-commerce experts to help you grow a profitable, independent retail or e-commerce business. If you're stuck in a rut, or if you feel like business is way harder than it should be, or you've overachieved all of the things that you've set out to and are wondering what to do next, or how do I even make this better? I know that you're going to love today's episode. If you're stuck in a rut, feel like business is way harder than it should be, or you've achieved all of the things that you set out to and are wondering what next, or how do I even make this better, then I know that you're going to love today's episode. Hey there, and thanks so much for joining me on today's episode of the Bringing Business to Retail podcast. One of the most popular downloads that I've ever created is called 9 Ways to Move Stock Without Having a Sale. Over 10,000 people have utilized the information in that download to get rid of their stock, to keep their brand from looking like a discount chain, and to keep more profits in their pockets. And whilst those strategies are great for the everyday running of a retail or e-commerce store, the fact remains that when you have a huge disruption in your supply chain, like we've seen this year, whether it's from a global pandemic or manufacturer problems or freight and logistics problems, at some point in time, every retail business is going to have to deal with too little or too much stock. But it's how you handle it that is super important. Since the beginning of the pandemic, I've been talking about supply chain, the implications that the pandemic has had on the supply chain, and what we're going to do in regards to inventory at Christmas, why you should avoid stocking up on non-essential retail and e-commerce items, and most importantly, using this time right now to reassess exactly who your ultimate customer is and what they want from you. So it was no surprise this week that news articles started rolling in about inventory management as the world starts to open back up again, albeit a little bit slowly and very cautiously. What consumers have been buying during lockdown is so completely different to what we would normally see at this time of year. There are massive amounts of inventory stockpiling up in stores and warehouses that just aren't going to be moved in time for seasonal changes. We can wish all we want, but at the end of the day, you only have a finite period of time to move this stock out. And this is especially pertinent for fashion and apparel brands, which I know that a lot of people listening to the podcast, that's the kind of business that they have. Now, essentially, when you have an oversupply, you've got a finite number of ways to get rid of that stock. You can continue to sell it at full retail right now and then deal with the outcome, deal with the glut of stock that you're going to have in a month or two's time. Or you can put it on sale right now so that you can recoup some of the money that's tied up and then have some liquid cash to pay bills, to pay wages, and to restock with more relevant inventory. Now, another option, if you're a big enough store, you might be able to offload large amounts of inventory to discount chain buyers for a fraction of what that stock is worth to you and just write off the loss. Or you could put it away and hope to bring it out again in a few seasons' time. Now, make no mistake, this is a very real threat to retailers of every size, whether you're a startup business or a global retailer. I was reading a Reuters article the other day, and the real estate company Knight Frank was talking about how they'd fielded inquiries for excess stock for over 6 million square feet of short-term let warehouse space just in Britain since the pandemic took hold there in March. So these companies need somewhere to put all of this stock. They can't put it in their existing warehouses. They can't put it on the shop floor because they're just not moving enough product. So they're having to rent warehouses just to hold this inventory. So today, I want to talk to you about the pros and cons of each of those strategies that I just talked about, in the hopes that with a little bit of clarity, along with some expert advice from your own financial advisors, you can make the best decision for your retail or e-commerce brand in regards to what you're going to do with an oversupply of inventory. So let's jump into each one. The first one is that you can just continue as you are. You can continue to sell at full retail right now as businesses start to open back up again, and just deal with it in a couple of months' time. Now, as customers start to come out of lockdown and they return to work and start to see their life as going somewhat back to normal, spending habits are going to change. On one hand, some stores have seen huge queues of customers just waiting and wanting to jump in and indulge in some real life retail therapy. It's been ridiculous, hasn't it? You've seen the news reports. Social distancing out the window. We just got to get in there and grab a bargain and just start shopping once again. But on the other hand, and to be honest, I think this is most consumers, they're just sitting back and eagerly watching and waiting to see what happens. So it can seem like an easy option. Just leave the pricing where it is right now to just sit back and wait and see, hoping that customers are going to come back and want to spend sooner rather than later. And in a couple of months' time, you'll go back, you'll reassess what's moving and what's not, and make adjustments where you have to. In the meantime, you're going to cross your fingers and hope that sales pick up and you'll be able to recoup some of the losses that may have occurred for you during the economic downturn. So the thing about this strategy is it really is just crossing your fingers and hoping and wishing and praying. And one of my biggest concerns, if this is the strategy that you're going to take, is that in this race to clear stock, both from large existing retailers and from liquidators that are being forced to move stock from stores that have gone under, discounting is going to be so prevalent that this is going to lead to an oversupply of really good quality stock, but at bargain basement prices. And the fact is, customers are going to be spoiled for choice. And let's be honest, when you have lots of things to choose from, it is very easy to disregard brand loyalty and just choose another product that, for all intents and purposes, does the same thing and is of the same quality, but they can get it for a fraction of the regular price. Now, I mentioned earlier that fashion, apparel, accessories, and even things like homewares, this is where it is easy for customers to substitute. Sure, they may love a brand, but as a customer, if you have a choice of two gorgeous handbags, both the same color but slightly different, but one is heavily reduced, there's a good chance that customers are going to take the cheaper option. So if you choose to leave your pricing where it is, I worry that with this huge deluge of inventory that is going to flood the market all the world round, that you might end up stuck with stock that you just can't move. Here in Australia, we have a huge retailer, on pure play e-commerce retailer called The Iconic. Now, they currently have a $422 million turnover. So they're big bickies when it comes to the fashion and apparel niche. And to be fair, you should always check out what the big brands are doing, because quite often they have access to information that we just don't have. But it was interesting because I was reading that the head of The Iconic, Erica Birchtold, was saying when a retailer is down 30 or even 50% in sales, there is a huge amount of inventory that they are just not clearing. So then all of your future profits are going to be spent trying to clear that inventory. Basically, she summed up what I just said. When your sales are down, you have a huge amount of stock that you have to move. And if you don't move it sooner rather than later, your profit is going to be tied up in just trying to clear stock that customers don't particularly want. So if your retail or e-commerce store is in one of those industries that is likely to have an oversupply, there's a pretty good chance that you're going to see a downward price push for the type of stock that you hold. And I want you to think about, can your business afford that? So one of the strategies is to leave the pricing as it is, hold it, see what happens. And at the other end of the scale is putting it all on sale right now so that you can recoup some of the money that's tied up in that inventory and have liquid funds to pay your bills, to pay your wages, and to restock with inventory that is going to sell. Now, opportunity cost is something that I learned in high school economics, and it has always stuck with me. It's probably why I was happy to sell Christmas stock in my own stores heavily discounted after Christmas rather than it sitting in a box in my storerooms. So many times I see retailers saying, I'm just going to put it away. But I was just like, get rid of it, get out the door. Now, the dictionary definition of opportunity cost is the loss of other alternatives when one alternative is chosen. And when it comes to retail and money, quite simply, opportunity cost is the money that you miss out on when you choose one option over another. So while you're holding inventory, whilst you have tens or even hundreds of thousands of dollars tied up in stock that you can't currently move, you aren't able to use that money to buy more stock that is going to turn a profit. Let's put this into an example. If you have, say, $5,000 in dresses that just aren't selling, for every day, hour, and even minute that you are holding onto it, you are losing money. That's right, losing money. Say you sold that stock very heavily discounted and you recouped just $1,000 of money. You've lost $4,000, but you now have $1,000 that you can use to buy new stock. And if you are operating on a 50% margin and a 30-day turnover, and you took that $1,000 and you reinvested it, every month you are going to be making $1,000 profit. So in just a handful of months, you've not only recouped the loss that you're making, but you are actually going to be ahead. And don't even get me started about the tax implications of having more stock at the end of the financial year than what you started off with, because now you're going to have your income assessed on it. It's like a double blow to the stomach, paying tax on stock that you don't even want to have, right? You're losing money by having the stock there, and you've got to pay tax on it. Ugh, never again. I learnt that the first year in business. Never, ever again. Now, I know that it always hurts to sell stock for less than you paid for it, but you have to remember, these are business decisions. They're not personal decisions. Whether you chose the wrong print or the wrong color or the wrong cut and customers just don't want it, or you're stuck in this position where you have stock that you just can't move, you are in the business of making money. And if you don't, you're going to go out of business. And the flow-on effect of that affects not just you and your family, but your team, your suppliers, and even your customers. So you have to choose the path that makes the best financial sense for where your retail or e-commerce business is at right now. Not last year, not even last month, but right now. What do you have to do to stay profitable? Now, of course, you should always speak to a financial advisor before making any decisions when it comes to inventory management. These decisions can't be made lightly, and you have to do them with the relevant data from your business. So that's pulling out your point of sale records, pulling out the data from your e-commerce store, reading the reports, forecasting, seeing what's happening in your market niche, see what's happening in your economy, in your local economy. Every one of us is going to be in a different set of circumstances. So you have to take that data. You have to put your big girl or big boy pants on and jump in and look at the numbers and make the best decision for your business, even if that does mean selling for less than you purchased it for. Okay, the next strategy, and to be fair, this probably only applies to a few of the people who are listening, but if you are a big enough chain of stores, you may be able to offload large amounts of inventory to discount chain buyers. The downside of this is you only get pennies on the dollar. You get a fraction of what you would get if you sold it yourself. And I've been watching this with a lot of interest. And last week I saw a media article about TJ Maxx, that's TJ Maxx and Marshalls, saying that there is this incredible availability of stock on the market right now. And they have their choice of pretty much anything they want to take and put it into their stores. However, they've been suffering as well. E-commerce is not part of their business model. And they've already come out and said they're going to be aggressively slashing prices on seasonally oriented merchandise straight out of the gate. So it's going to go from distribution center to clearance rack. It's not even going to sit at full price. Now, when a discount retailer is talking about discounting new stock as soon as it hits the shelves, you know that the market is hurting. But now that we've been talking about opportunity and cash flow, you can see why they do it, right? They know that they have to get back that cash because cash is king. Hopefully you listened to last week's episode where Adam Lean and I talked all about how important cash flow is in your business, specifically right now. And without that cash flow, you can't purchase more stock. And if you can't purchase more appropriate stock for your customers, then they're going to go elsewhere. So if you are a large enough store, you might be able to dump a bunch of stock on those discount buyers, but it's going to be at a heavily reduced rate. So what are the options if you aren't a huge chain of stores? Well, you could look at taking that same strategy and putting it into play where possible. So you could look at using group buying sites. Do you have an oversupply of a specific product or a specific brand that everyone loves? And approaching those group buying sites. You could also go back to basics and use something like Facebook Marketplace or your Facebook shop and give yourself your own discount store. In fact, this is something that a lot of businesses have been talking about. A lot of the luxury brands have been creating their own outlets, e-commerce outlets, to get rid of this stock. Don't overlook places like eBay and Amazon and Craigslist and Gumtree here in Australia. The more channels that you have to offload excess inventory, the better chance you have of getting that money back, getting that cash flow back as quick as possible. Now, I know that during the height of the pandemic, Amazon actually closed off their warehouses to anything but a core group of essential products. But those restrictions are starting to relax. So is that something that you need to investigate right now if you're not doing it already? What other channels can you put into place to get rid of this inventory? And the great thing is if you're using a website like Shopify, it has built-in integrations to a lot of these channels. So just spending a short amount of time and clicking a few buttons means that you can add these platforms into your omni-channel experience. Now, the last strategy that you've got is to just put it away and bring it back out in a couple of seasons' time. And this is one that I see a lot of independent retailers doing. Quite often it's because they just don't understand that value of money, that understanding of opportunity cost. But it's not just independent retailers who do it. I was just reading an article about British retailer Next and the brand Adidas, who have said that they're actually going to put away tens of millions of dollars worth of their, what they've called their evergreen basics. So those products that people buy season in, season out, they're going to put them away in and just bring them back out if consumer demand bounces back up again, or they'll bring it out next season. And these are items like underwear, t-shirts, really classic sneaker styles, with stuff that customers buy regardless of the season. But like we've talked about, putting this stuff away is really risky. there's not only that opportunity cost that we're talking about, but we're talking about stock that can get damaged while it's in storage, the quality can go down. A product that's been sitting in a hot warehouse for 12 months realistically isn't going to be in the same condition that it was when it came straight out the factory and onto the shop floor. And making a decision to pay for space to store and hold stock is a huge physical responsibility for a retail brand. Now, it doesn't mean that you have to be hiring out warehouses to put your stock. Every square metre of your stockroom, every square metre of 3PL space that you're paying for, you are renting that space to hold the inventory. And as the owner or the key decision maker of a business, it is up to you to stay on top of where that money is going and the return on investment that you're getting from it. If it is just sitting there taking up space and not earning you an income, then you have to look at whether it is financially viable to keep it there. Now, I know that this is sounding very much doom and gloom, right? But it doesn't need to be like that. The fact is, retail is bouncing back. And on the bright side, the bright side for you guys, many fast fashion brands and department stores that rely heavily on mass-produced imports are struggling to fill their shelves with no light at the end of the tunnel for a lot of months to come. Here in Australia, there's been this huge controversy in the media about how discount retailer Kmart's shelves are empty. And I'll have to admit, I took Lana there last week, I think it was, and she walked around and she said all the shops are empty. And we had a discussion about global supply chain disruption. And apparently she went to school the next day and told everybody about why there's nothing on the shelves at Kmart. It's all because of the global supply chain disruption. And just last week, I was reading that Kmart was saying that they're not expecting their stock levels to return to normal until late July. Now, the funny thing was they didn't blame the global supply chain disruption. They actually said that it was increased product demand combined with putting their manufacturing on hold due to the uncertainty that was arising from the pandemic. The fact is, this just presents an opportunity for independent retailers. You're in a much stronger position right now to grab market share that potentially you didn't have access to before because you have stock that is available to purchase right now. But I also see the pandemic as giving rise to a new focus on sustainable products and slow fashion and locally made goods. So if you have those products, right now is the time to ensure that you leverage any of those points of difference so that you can attract those customers who are out there and looking to purchase as we start to open back up again. So my top 3 tips to take away from this episode are: number 1, you must be tracking your inventory across all of your channels. But more importantly, you've got to actually be using that data to make strategic decisions that are relevant to your business right now. Number 2 is never before has it become more important to have an expert financial advisor on your team. You can't be making these decisions based on data from last quarter or even last month. Right now, you've got to be tracking that data, analysing that data on a weekly, I'm going to go so far as to say on a daily basis at the moment. And if understanding all this physical stuff is not your strong point, you need to be seeking out an expert who can help you to decipher it and make those best decisions for your business at this point in time. And number 3 is to use this time to survey your customers to see what they want. Your inventory purchases over the next few months, they have to be shrewd. You have to be so particular about what you're buying in. Those purchases have to be profitable for you. Now is not the time to be going all risky. We don't have long until the Christmas season buying starts. So right now you need fast-moving, high-margin stock. Now, I don't necessarily mean you need fast fashion, but you need products that are going to turn over quickly and products that have a high margin. You can't afford to have more inventory sitting on the shelf any longer than it needs to be, whatever that looks like for your store. Now, I hope today's episode has helped you get a little bit clearer about the options that you have for inventory that is sitting in your store and that is also sitting in your supply chain right now. So the stuff that you know is coming in. Right now, retailers all over the globe, we need to band together. So I'd love if you could leave a review of this podcast so that more retail and e-commerce store owners can find the Bringing Business to Retail podcast and help them stay profitable. I'll see you again next week. I hope you enjoyed this week's episode of the Bringing Business to Retail podcast. You can find all of the show notes over at selenaknight.com. If you found something that you heard today particularly useful, I'd love it if you could leave me a review on iTunes or Stitcher. And of course, feel free to share this episode with someone that you think could benefit by listening to it. Want more retail biz strategies? You can watch the Bringing Business to Retail TV show, where each week I'll answer a question or provide you with a simple, actionable retail biz strategy that you can implement in your business right away. If you have a question or a guest, I'd love to hear from you. Drop my team an email at podcast@selenaknight.com, and I'll see you on the next episode. Have a great week.